Does your state have an estate tax or an inheritance tax? And why you need to understand if it does and how to deal with it. I'm telling you, my friends, a lot of people say, inheritance tax, estate tax, that's just for rich people, blah, blah, blah. No. In fact, I would argue the vast majority of people who suffer from these taxes are not Mr. Burnses of the world. They're going to be regular middle-class people who have some real estate. I'm telling you, man, I've seen it from my own very eyes. I did a video on the Pennsylvania inheritance tax not too long ago, and yeah, you don't have to be rich to pay that, let me tell you. But I'll give an example of an estate that had a state death tax and estate tax. And this is back probably in 2008. I was working with a lady from Louisiana. Her folks passed on. They were farmers. I think they had like $2 or $3 million in real estate, farmland, and maybe a home and a couple $100,000 in investments. I can't remember. But it was about roughly a $3 to $4 million estate when all was said and done. And I remember her telling me that that they had to pay is like $400,000 or $500,000 to the state of Louisiana for the state death tax. Again, that's called an estate tax before the property could be settled. And I remember her telling me too that because most of the assets were in real estate, i.e. farmland, and not in liquid assets, they had to sell the real estate in order to generate the cash to pay the state estate tax. They didn't have enough in cash. They didn't have liquid accounts. They had to sell stuff. And when you're trying to sell stuff to settle a debt to the estate, or a debt to the state, in this case, Louisiana, it doesn't just happen. It takes a while to do it. There are transaction costs. And by the way, you might not be able to sell it at a price you want. It's essentially a fire sale. Because what happens is, if you're trying to sell this farmland, you not know that other people have been watching that and saying, I see that Farmer Joe just died. We might be able to lowball him. And I'm just telling you right now. And I don't remember the whole story behind this. I just remember talking to this lady. It was a young lady, probably only 38, 39 years old, and telling me the story of they had to pay, before they could get their assets, how they had to pay a couple $100,000 in state death tax. I remember that off the freaking farmer dad and mom who had done enough in terms of farm the land, built a nice house, a relatively nice house, and then on top of that had squirreled away a little bit of money because I think the mom was a school teacher or something. I can't remember. But the whole point was, and her issue is that she was using, the reason I got to talk to her, because once that estate settled, she inherited a certain amount of money, was thinking about should she buy, was she going to build a new home for her and her family. It's horrible. All right, so let's look at the states that have a state death tax, estate tax, if you will. The same thing. I'm just going to call it the state death tax because it's hard to say the state estate tax, all right? And we'll just go down to the ones that do. And this is from actech.org. Actech is the American College of Trust and Estate Counsel. I get a lot of people who say, what kind of attorney should I use to do my estate planning? And I always refer them to actech.org. actec.org. You can go up to About Us and find a fellow. I don't want to do it because I'll lose this page, but you find a fellow, and a fellow is man or woman. It's just a fellow, like a fellowship. And you say, okay, I want to find somebody in Louisiana who does estate tax. Now, some of these guys can be like the white shoe people, fancy schmancies, but not all of them. A lot of these guys and ladies on this site are just estate planning attorneys, and that's what they do. Actech, I can't remember the specifics, but you have to be nominated by your peers. You can't have any violations from some kind of suit or something like that in the last 5 years. I can't remember. There's a level of a security that they have to pass before they become an Actech fellow. It's not just like I'm going to pay $100 to get on this website. It's not like that. I forgot the whole issue here, but there is some kind of level of assurance that you're dealing with people who are clean. Their peers nominate them, and there are no current issues or something like that. You'll have to look into that. But I'm a fan. All right. Alabama, Alaska, none. Arizona, none. Governor Napolitano signed Napolitano, which permanently repealed Arizona's estate tax in 2006. So I was surprised to hear that because I remember we had old Fife Symington back in the old day when I was living in Arizona. I would have thought they would have no estate tax then. Arkansas, no. California, no. All right, good. Colorado, no. Connecticut, here we go. So the start point is they have a separate estate tax, and the exemption is $3.6 million. That's what this says right here, state death tax exemption. We're going to talk about what that means here. So let's read this. In October 2017, the Connecticut governor signed the 2018 Budget Act, which increased the exemption for the Connecticut state and a gift tax to $2.6 million in 2018 to $3.6 where it's at now. And then it will be the federal estate and gift tax exemption in 2020. So come next year, it's going to be the federal estate and gift tax, which is essentially was $11.5 million per person today. I'm not sure if that's, I don't know if it's going to be portable. But next year, it'll be much higher than it is right now. That's good. But on May 18th, May 2018, they changed this law to extend the phase-in of the exemption to 2023 to reflect the increase in the federal exemption to $10 million, and they indexed it essentially beginning in 2019. The cap on the Connecticut state and gift tax is reduced to $15 million. If that makes sense. So basically, there's a lot of changes here. So in 2019, it looks like the maximum exemption will be $15 million. So if you don't have an estate more than 15, come 2019, that will be the maximum of your estate tax. Now, it still looks like the current exemption is $3 million, 3.6. So if you have an estate over $3.6 million today, you're going to pay a state of Connecticut estate tax. If you have come 2023, the max will be will be capped at some point at 15 million. So just keep that in mind. So now let me tell you what estate tax is. It's everything you own. Everything you own. That includes a living trust. That includes life insurance. That includes IRAs. If you own it, it is part of your estate and it will be subject to estate tax accordingly. Just be advised. A lot of people think if it's a living trust, it's trust. I don't own it. No, you certainly do. You know why? Because you're getting taxes on that, and you are the grantor. Most likely, you're the trustee. You own it. You control it. You're paying tax on it. It's part of your estate. Life insurance is part of your estate. I cannot stress this enough. I have $1 million life insurance. I get killed. That $1 million life insurance goes where? It goes to my estate. It will be proceeded to go tax-free to my survivors for sure, but as an income tax-free, but is not estate tax-free. Life insurance is not estate tax-free. All right, Delaware sunsets the estate tax in 2017. So Delaware is just a top-of-the-shelf state in terms of taxation across the board. DC, no separate Q-tip election. I'm not going to get into that, but they have 5.6 million is their exemption, which might seem like it's a lot, but I'm telling you, if you have, let's say, $3 million home in Northwest DC and a $3 million IRA, you are now subject to estate tax for sure. And a $2 million life insurance, you are. That probably won't be most of you all, but it could be. None in Georgia, none in Florida. Here's Hawaii, a $5.5 million exemption. The governor signed in 2018 a law which amended the estate tax to reduce the Hawaiian exemption effective 2018 to $5 million index for inflation. So they did index for inflation. The DOT released an announcement 2018 in September, which announced that the exemption will remain at the amount available to decedents dying during 2017. In response to calls from practitioners, the Department of Transportation indicated that it was not going to adjust the exemption for inflation before 2019. So right now, the exemption in Hawaii is 5.5 million, essentially. Nothing in Idaho. Here's Illinois. All right. All right, so let's see what we got here. Governor Quinn signed a law which increased Illinois' individual and corporate income tax rates, including the act was a reinstatement of the estate tax with a $2 million exemption. The Senate bill passed both the House and Senate as part of the tax package on 2001. It increased the exemption to $3.5 million in 2012 and $4 million in 2013 and beyond. So basically what we have here is Illinois has a $4 million exemption, which has not increased, is not indexed for inflation. So that will creep up on us at some point. So remember, if you have a house that's $2 million, you have an IRA that's $2 million, you have an estate right there immediately. If you die and that house is $2 million and your IRA is $2 million and you have $2 million in life insurance, you have a $2 million that'll be subject to whatever the state of Illinois state tax amount is. And I don't know. This doesn't tell us the amount. We can start looking at that at a different point. Illinois, Governor Mike Pence, now Vice President, signed the law which got rid of Indiana estate and inheritance tax as well, or inheritance tax. Yep. Iowa, same thing, no estate tax. Kansas, none. And Kentucky has a pretty significant inheritance tax, which I'll dive into in a different video. Louisiana, none. And I don't remember when they got rid of Louisiana. I just use that as an example, but it wasn't that long ago. Maine. All right, so we got 5.7 million is the exemption here. All right, on June 30th, 2015, the Maine legislature overrode the governor's veto, the budget bill for fiscal years 2016 and 17. As part of the law, the Maine exemption was tagged to the federal exemption for decedents dying on or after January 2016. So the tax rates are, so their exemption was tagged to the federal exemption 5.7, but it doesn't look like they adjusted it at all. I guess they just used a 5.7 for the 2016. So right now, your state tax rates is 8% of the first 3 million above this 5.7, 12% above 6 million above 5.7. So if you got a state in Maine about 12 million bucks, guess what? You're going to have a 12% tax, a state tax on anything above 5.7. That's tough, man. All right. So let's see here. 2018, they passed law without the governor's signature. The new law amends Maine, I don't know what that revenue something. Yeah, 5.6. Okay, so they are adjusting to 5.6 adjusted for inflation. All right, that's good. For states, Maine also subjects real or tangible property located in Maine that's transferred to a trust, LLC. All right, so basically in Maine, you got 5.6 million. It looks like it's an index for inflation. Yeah, adjusted for inflation. So there you go. And then here's the tax rates, 8, 10, 12. I'm sure my man LePage, but that did not make him happy. That's why he's moving to Florida, by the way. The old Governor LePage, man, the left hated that guy, but he's effective. And he moved to Florida because Maine taxes too much. Maryland got both inheritance and estate tax. Right now, the estate tax is a $5 million exemption. So in 2018, they got a new law which provides that from 2019 thereafter, the Maryland threshold would be capped at the fixed amount of $5 million rather than being equal to inflation rate federal exemption. Okay. The new law provides for the portability of, well, that's good. So basically, Josh and Charlotte live in Maryland. I got $5 million in my name. Charlotte's got $5 million in her name. I don't use mine. Charlotte has a $10 million exemption because it's portable. You got a spousal portability, which is good. But Maryland is not indexing that for inflation, that $5 million, but it's certainly better than what it used to be. Maryland was horrible before, man. Yeah, you can see right here, 2016, they increased their threshold from 1.5 to where we're at today, so good for them. Massachusetts is the bear, man. A $1 million estate. This is nuts. Let's see. Tax imposed on states exceeding applicable exclusion. Even if that amount is below. So once you exceed that amount, it retroactives going back to the first dollar. I remember talking to some estate planning attorneys in Massachusetts. It's crazy. I just tell them the retroactive nature of it. They call it something else, not retroactive, but essentially it's retroactive. You got $1 million exemption. Your estate, now you have a $1.5 million estate when you die. And your tax as if you had a $1.5 million estate. You don't get the first $1 million tax free. And that might have changed. Well, that's only last year. I don't know. But still something for you. If you're in Massachusetts, you're in a world of hurt. No other way around that. It's nuts. Not in Michigan. Minnesota recently passed something, if I'm not mistaken. Yeah, right here. 2017, the governor signed the budget bill, which increased the state exemption from 1.8 to 2.1. Retroactively and increase the exemption to 2.7 where we are today, and $3 million for 2020 and beyond. So again, if you're in Minnesota, you only got $3 million, my friend. It includes house, any property, and life insurance. Anything you own. $3 million, that's a lot of money. Now, if you factor in life insurance and your home in there, it's not just liquid assets. Mississippi, Missouri, Montana, nothing. Nebraska got rid of their, they do have a county inheritance tax. That's right. They did not get rid of that. We'll dive into that some other thing maybe. Nevada, New Hampshire, nothing. New Jersey, they really changed things around a lot. So this is good, New Jersey. They've done some good work here. Christie, as much as we all hate Christie, or maybe you do, I like Christie, but he signed Assembly bill, which was a tax bill accompanying blah, 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 which revised the state transportation fund. That's when they raised the gas tax in New Jersey to get rid of their estate tax, if I'm not mistaken. Under this law, the pickup tax had a $2 million exemption and was eliminated. Yeah, so there's no estate tax in New Jersey anymore. The new law also eliminated the tax on New Jersey real and tangible property of a non-resident decedent, but they did not apply to the separate inheritance tax in New Jersey. So New Jersey has no estate tax anymore, which is, I'm telling you, man, it was insane how bad that was. And I lived in New Jersey. It was $675,000. I mean, our house in Hannaford almost put us there. $675,000. Crazy, which we're already getting killed property tax wise. So love Chris or hate him. He saved you folks in New Jersey a lot of money, man. I'm telling you, because the Dems did not want to do that. I'm telling you right now, the Dems, they liked it, which is nuts. But he said nope. All right, so New York used to have crazy ones too. Let's see what it is now. As of January 1st, 2019, the New York estate tax exemption will be the same as the federal, all right, which is $5 million indexed for inflation. The maximum rate of tax prior to the 2017 tax. Okay, so prior to the Trumpster, New York still has a state tax exemption that was prior to the Trumpster one. So it's still $5.7 million in New York, but that's a lot better than it was. It used to be $1 million. I remember this right here, $1 million. I'll never forget. I was talking to this hedge fund guy. I said, dude, you're going to get killed, man. He goes, I think the government's going to take care of me. I said, you have a $1 million estate exemption in New York. I'm not worried about it. I said, you're a fool. There's a hedge fund guy who's supposed to know how to manage money. He had like a sizable estate. Sizable, if you know what I'm saying. And I said, you're going to get killed. Okay. It's okay. Yeah. Well, I guess that doesn't matter now. The New York estate tax is a cliff tax. If the value of the estate is more than 105% of the current exemption, the exemption will not be available. Wow. So that sounds like Massachusetts, where basically once you go above that exemption, it's going back to the first dollar. That's what it sounds like to me. Newark clarified the new rate schedule previously okay. Continues not to permit so it's not portable either. So it is where bypass trust come to play. If you're husband and wife or married couple, you need to really be looking at estate planning if you're going to stay over $5 million, because it is a cliff tax right there. Now I don't know the New York law; I don't follow that much anymore, but if it's a cliff tax, the way I understand, like Massachusetts, if your estate is included as a taxable estate, the very first dollar will be subject to the estate tax, which is nuts. North Carolina, North Dakota, Ohio, Oklahoma, nothing, which is good. Oregon has its own tax, which is, whoa, $1 million? With standalone estate tax, $1 million. A new tax has a $1 million threshold with the rates increasing from 10% to, whoa, that can't be right. So Oregon only has $1 million threshold, and the taxes are 10 to 16%. Determination of the state for Oregon estate tax purposes is based on a federal taxable state with adjustment. All right, well, we're going to have to get some Oregon attorneys on here. There it is. The new tax law has a $1 million threshold with rates increasing from 10 to 16% between 1 and 9.5 million. Determination of the estate for Florida estate tax purposes. That tells me how they're determining what is included in your estate, not the actual value. Is based on a federal taxable estate with adjustment. Man, that. Eesh. All right, so we talked about Pennsylvania inheritance tax. It's nuts. Rhode Island, 1.561 million. Whoever that Ramadi or whatever her name is, I like her. She's a Democrat, so I am bipartisan. I'm a fan of hers. I forgot her name off the top of my head. Let me pause this real quick. All right, so we got New York, Rhode Island governor approved changes to Rhode Island state tax by increasing the exemption to 1.5 million indexed for inflation and eliminating the cliff tax. Ooh, so there's only 1.5 million in Rhode Island too. Wow. Eesh. 1.5 million in this index for inflation, but it did get rid of the cliff tax. That's bad. All right. Nothing in South Dakota, nothing in South Carolina, nothing in Tennessee, nothing in Texas, nothing in Utah, Vermont. Let's see, 2.75 million. Is that index for inflation? The exclusion is scheduled to equal. All right, so let's see. Vermont increased the exemption to 2.75 million in 2011. As of January, is scheduled to equal the federal state applicable exclusion so long as the federal state tax exclusion is not less than $2 million or more than 3.5. Well, it's much more than 3.5. So Vermont, ooh, previously the estate tax was frozen at the federal death. Yeah, look at that, man. Nothing in Virginia. Washington State, there you go. And they're always trying. Bill Gates' dad, he loves getting more and more people's money. The working class. He says, I need more working class money. I need more working class money. Because you know what Bill and Melinda do, don't you? They give to charity so they don't have to pay it. Yay. But what does Joe and Pop Six-Pack have to do? They got to deal with it. All right, so let's see here. In 2013, old Governor Inslee signed the bill which closed an exemption for marital trust retroactively immediately prior to when the deal revenue was about to start. Okay, I don't know what that means. Here we go. Oh, it looks like it's 2.193 million. By narrow passes standalone estate tax. Okay, so here it is. 2005, they passed a standalone estate tax with rates ranging from 10 to 19%. And a 1 million exemption in 2005 and 2 million thereafter. And the governor signed the legislation. I can't tell this. It's got to be indexed for inflation. All right, 2013. All right, so here we go. 2013, they're indexing the 2 million for inflation. Okay, there you go. So it's $2 million for an index for inflation. And they're going to, okay. Wisconsin. Nothing, and then Wyoming, nothing. So there you go. Woo! Man, that is a lot of stuff there. All right, so and this is from McGuire Woods, and you might not be familiar with McGuire Woods. I am. They're again one of the blue or the white shoe companies, if that makes sense. You know, fancy, but they're good. They have good stuff. So I'll post this on the show notes. But if you live in one of these states, man, and you're ignorant of this, on you. It's not on the government. You're going to pay. You won't because you'll be dead, but your heirs will, and that's bad. Nuts. All right, we'll see you next time.